Hallo, herzlich willkommen. Hello, everybody. Good morning, everyone, and a warm welcome to today's conference, the healthcare conference hosted by MBB Research. Today, we are joined by leading listed companies from the pharmaceutical, the biotech, the medtech, and health industries, and they'll be sharing the latest developments, strategic perspectives, and insights into one of the most dynamic sectors, the healthcare industries. And I'm happy to welcome the first company, which is Drägerwerk. But before we dive in, a quick housekeeping note. The conference is being recorded and all participants are in a listen-only mode. If you have any question, please submit them using the chat box and we'll address all the questions in the Q&A sessions after the presentations. So we'll start the day with Drägerwerk, presented by Head of Investor Relations, Mr. Fischler. He will walk us through the company's equity story, touching on key milestones. And from my side, nice to have you with us, Mr. Fischler, and the floor is yours.
Yes, thank you. Good morning together. And first of all, thank you to MWB for hosting this event. And thank you all for your interest in Drägerwerk. I've had a small peek into the participants. Some of you already know the story, others do not. So let's run through the presentation and then end up, as usual, with a Q&A session. So let's get started. Drägerwerk, the combining factor, despite our broad spectrum of different kind of activities that we have, is that all of our products protect, support, or save lives. That's the combining factor, because if you look at us, then you will see that the company has two divisions. One, the medical, and this is a healthcare conference. We'll spend some time on the medical division, of course, but also a safety division, and the net sales distribution between the two is not quite 50-50. The medical is still a little bit larger, but since safety has been growing stronger in the last couple of years, it's become almost 50-50. Looking at the earnings, then safety is even surpassing medical by quite a bit. So the high-level view on the company, we are a typical Deutsche Mittelstand company, 3.4 billion euro in net sales last year. We have quite a global footprint, meaning that we do business in basically every country of the planet. And we do that usually with sales partners, but in roughly 50 countries, we have own sales and service companies where we go direct to the customer. If we look at the production footprint, then despite having the largest portion of the value added within Luebeck, maybe 80-90% of the production is in Luebeck, but we do have roughly 10-12 sites throughout the world where we do production with, in each case, a specific reason. May it be that in Massachusetts, where we have our patient monitoring business, there is some sort of a hub of people that are very knowledgeable in that area. We have a production facility in the Czech Republic where we locate production lines that have a high labor content to benefit from the lower wage costs. Or if we go further to the east, we have a production site in China where we build products that are specifically for the Chinese market, since there are more and more buy local policies in that country, and in order to participate, one needs a certain footprint in that country. Currently, we're increasing our footprint in India, also there, a low-cost country, but also very specific for participating in large tenders that have a certain local content requirement. Moving on to our markets, and Here again, on this picture, you have medical and safety together, but medical basically is only hospital. So customer-wise, we serve the hospital, whereas in the safety business, we have a whole variety of different kind of verticals that we offer our services to. Let's start with the larger one, the medical. So customer point is the hospital, and within the hospital, you will find Dräger in the high acuity area. So in the operating room or in an intensive care ward. From a product perspective, that's the blue part of this chart. Despite the fact that we do not disclose exact volumes or net sales volumes for our product areas, just to give you a feeling of the portfolio, the largest two areas are anesthesia, where we are a global market leader um, with our anesthesia devices. So that's in the operating room, and our ventilation business. So in the intensive care unit, ventilators, you might know that Dräger is one of the suppliers of high acuity ventilation, and especially during the pandemic, business had soared in this area since ventilators were in very high demand. We'll see that when we look at the 5-year chart, that we had a substantial tailwind in this area. Besides that, we're also present in neonatal wards, so there, especially for thermoregulations, incubators. And moving on to the right side of the slide, we have a franchise in patient monitoring. That's an important part also to mention, because if we look at the left side, anesthesia, ventilation, we're always a number one, number two, in some markets, maybe a number three of the market, high market shares. Different in patient monitoring, where we're only a market follower after two very strong competitors in this market. And this is an area where we do not have the volume required to have a sufficient contribution margin in this area. And since it is an important strategic part, and I'll get to this on the next slide, this is an area where we're currently investing quite a lot of our R&D budget into this area to develop our roadmap and launch a new generation of patient monitoring devices. And that's one of the, or probably the most important reason for the low profitability of the division, because if you go into the financials and you look at the profitability, it becomes obvious that the profitability on the medical side of the business is subpar, unsatisfactory, and that's the main reason for that. Last word to this slide. On the right bottom side, you have the after sales business, which is roughly 35-40%, depending on the year, of net sales. So that would be a service. We love to do service. We have in many countries the required infrastructure on the ground. In our home market, Germany, we in some cases have even offices on the premises of hospitals, where we have contracts to do large parts of the services of the hospital. So that's one part of the after sales business. And the other part is the consumable and the spare part business, which is growing with above average rates of the group and has an interesting profitability profile. Now, a slide on the strategy of the hospital division, and also the reasoning for investing this much money into the patient monitoring system. We believe that we will support customers best by automating as much as possible. And there's a technical a reason which will allow us going forward to add new functionality, new added value to customers, and that's the interoperability possibility of medical devices. So a couple of years ago, you go to a ward or an operating room, every device has its own way of working, and there was hardly any communication between the devices. This is in the course of changing currently due to a international protocol, and Dräger is quite proud that we were one of the companies that drove this development under the roof of IEEE, the development of um, uh, a technical standard that is responsible for a safe bidirectional communication between medical devices of different suppliers. And what does that mean? So starting now in this years, it is possible to send data to a supplier, to a medical device of a different supplier, and receive on a safe way an answer. And by having this communication between the devices, you can build new functionality, which can really change the way hospitals work today. And a first product that uses exactly this, we are currently in the launch phase. We call it Silent ICU. And what you see on this picture here is an intensive care ward. So in the back, you have an intensive care a bed, and it's closed. And the important thing about that is it's quiet in there because the devices that are at the bedside communicate with each other and have agreed on being quiet. So no alarms in the room. The alarms are being forwarded with one of our partners, ASCOM, to either a central station on the left side here or to the mobile device of the caregivers. And that has several really important advantages for the customer. One is that it's quiet in the room, patient can sleep, which obviously is good, beneficial for the well-being of the patient, so patient outcome. And the second is that you're eliminating inefficient processes. The caregiver doesn't have to go to the bedside every time there's an alarm to look at it, to then change parameters, etc. This now is forwarded to him, and he can, by receiving that, check what's uh, the matter with that patient. And going forward, and that's a little bit, let's say, where does this end in a couple of years? And I say in a couple of years because there's still quite some regulatory hurdles to take. It ends, or the potential that it has is that you receive something like that and you're able then to not only silence it on your device, but actually change parameters at the device remotely. And going forward, you might even define an upper limit, a lower limit, and by doing so, enter into automation and having the device change a parameter within the boundaries that you have just set over different suppliers. So, and that's a real change compared to how intensive care wards work today, with big benefit for the customers. That's the reason why we are investing so much in the patient monitoring, and we strongly believe that this approach will drive our growth in the coming years in the medical division. So I know it's a medical conference, but half of, not quite, but almost half of our net sales is done in the safety division. So let's move on to this business. Here we're catering to many different customer groups, so fire services, chemical plants, mining industries, and a whole lot of other industries. On a product perspective, the big franchises that we have are breathing, again, on the left side, breathing systems. So self-contained breathing apparatuses, that's what the firefighters wear on the back with the bottle and the face mask. But also gas detection system is a very core business of Dräger. So the detection of any kind of hazardous gas in an industrial environment, be it on a fixed install basis, so protecting the infrastructure, or on a portable basis where your employees carry small devices that measure the gas surrounding them. And Dräger is very good in being able to detect many kinds of different gases and very reliable. Next to PPE business, we also have, moving on to the right side, more customer-made solutions, engineered solutions. Um, so for example, training simulators for firefighters, and this, not only this, but this is also one of the business, and I'll go into that now on the next slide, that offers a future potential for our defense business. I'll get to that. Last word on this slide, service consumables, a little bit lower due to the sort of products that we have here than in medical. It's more in the area of 25-30%. So I mentioned that defense. Somehow visiting these conferences, you might have the impression that now probably every second company has now a defense franchise. Well, with Dräger, that's actually true. We have catered to the defense industry for many years, and so this, with the changing environment, this now has a potential to actually become a substantial part also of the equity story, since currently our net sales in this area is still below 100 million, quite a bit below 100 million. But with the pipeline that we have, and especially the sales funnels, so actual projects that we are currently discussing with customers, this business has the potential to actually grow threefold in the next years to 2028. That's our target. And from an economical point of view, interesting part of the business is that it's a well-protected business. You need long-lasting relationships with the customer. We have these relationships with the big suppliers that we all know, Rheinmetall, etc. And product-wise, we supply a lot of different things, especially filter technology. That's why this picture is on. So filter technology to actually protect the people within a vessel or a vehicle. We have light breathing protection, so an ABC mask that we supply to the Deutsche Bundeswehr, for example, and also gas measurement. Next to also, and that's something that has to do with medical again, we supply also Feldlazarette, what's the English word? So the hospitals, military hospitals, with our devices. So quick view on the 5-year financials. And if 2019 was still on there, then that would be actually a normalized year. That if I look at the development, I think one has to take out the tailwind of the Corona pandemic, 2020, 21, clear tailwind, one-off in positive point of view, with strong net sales development, strong EBIT development. One should actually take that out. And 2019 was a net sales year of 2.7, 2.8 million net sales, an EBIT of 66 million euros. So that's more or less the starting point one should take. 2022 on this chart with a negative EBIT, which is very unusual for us. But that is due to the very difficult supply chain situation that almost every company had in the world. So we had a strong order intake, and that we were not able to deliver net sales, and therefore, in combination with the high cost increases of parts, and that's what you see here on the gross margin decline, we ended up with a negative EBIT. We then kicked off what we call profitability first, so a corporate objective that had a stronger focus on cash flow development and on profitability. And we then turned around this financial situation in 2023, strong rebound in the EBIT, and the target to improve profitability also going further, and that's the closest that comes to a midterm target. We want to increase the EBIT margin by 1 percentage point per annum on average over the next couple of years. 2024 was actually a strong year. It was helped by some one-off effects in the amount of 22 million, but also if you take that out, then we have an EBIT margin of 5.1, and that fully is in line with a profitability improvement. And why do I say a strong year? Because we had a very strong headwind from declining China business, and that was almost compensated on the net sales side. So last word on how is current trading. Q1 started, and one has to be aware of the different kind of seasonality we have. So Q1 is always very weak, followed by Q2, Q3, which is okay, and then a very strong year-end business. That's a typical budgeting effect that many of our customers have. And Q1 was pretty much in line with this development. A weak order, a strong order intake, 8% in safety, 4% in medical, on the group level 6%. So a very strong order intake, but a weak net sales development. And that has, sometimes that's just the way it is. And here we also have a small one effect in their hiccup in the supply chain, which now currently is under control again, and production is running normally or even above normal. So that will pick up again, and that will then also make it possible, or that's our current assessment, to reach our full year targets, which are to grow net sales on a constant currency by 1 to 5% and reach an EBIT margin from 3.5 to up to 6.5%. So that's it for the prepared slides, and now we go into Q&A.
Mr. Fischler, many thanks for the insight you provided already, and you've answered some of the questions, but we also received new questions, and quite a typical but an also interesting one is what are the next steps for Dräger to reach its midterm EBIT margin target of 10%?
Well, first of all, the business is in a good condition. So we see order intake, which is indicating a functioning market, and the portfolio is capable of delivering to that. So it's a mixture between using these possibilities, the market offer, and staying cautious in terms of operational improvements, in terms of cost consciousness, and that will give us the sufficient growth and also with it the leverage in order to continue to grow our profitability and reach that target. Having said that, it's a target that looks at 1 percentage point improvement on average. So it's not a linear thing. We do have moving parts, which can be quite strong, coming from mix effects, coming from currencies. And we take that out of the equation. They can go up and down, and that's why we say, okay, on average, we want to meet this. And these fluctuations can easily move an EBIT margin by a percentage point in a full year. Currently, we see for 25 an adverse effect coming from currencies, and we see an headwind coming from, of course, from the tax, from the tariffs, and the currency headwind is the basis is that we see a devaluation of many currencies compared to the euro. I want to exclude the US dollar because the development of the US dollar is positive for us since we are US dollar short due to our footprint that we have there, and also our procurement, which is in some parts in US dollar. So headwinds coming from currencies, potential headwinds coming from tariffs. Now, a word on tariffs. We are working with a 10 to 30 scenario, meaning 10% tariff impact on Europe, US, and 30% on China, US. And if that stays the way it is, then for the current year, we will have an EBIT impact in the high single-digit area, which is in of a magnitude which we believe can be compensated from the other operational business. So currently, one has to be careful. I mean, everybody knows it changes from day to day. No reason on touching the guidance coming from that area.
Thank you for the update. I still remember in our last call that tariffs have been a huge topic. For clarifying this one, um, really good. You've mentioned China as well. How is the China business doing currently? Is
Mhm.
there any kind of strategy you are following in China?
So starting point is a China business, which in the past was really a growth driver, and 24 with China strictly imposing by local policies and also anti-corruption measures that change the way hospitals are set together. In some cases, our normal contact persons are gone. Um, and that led to a real strong decline in 24. And I'm talking here high double-digit million euro figure of net sales just gone compared to our plan. The expectations for 25 and currently that seems to be a good assumption is that we will have slight growth in China again. Nothing to write home about, but the important statement here is that the decline does not continue. That's how it seems currently, and that would then be a stabilization of the business. I believe China will never recover to old strength, but it has also declined in our importance, which I must say is also a positive. It was our third largest country in the past, net sales wise. Meanwhile, it's only number 4, I think. So it has declined in importance, and we have adjusted our organization to that new role or size or importance of the business. But it remains currently, it remains still a bigger country for us.
Okay, thank you for these
Mhm.
insights. Getting back to the development in 2025, and you've mentioned in the presentation already the quarterly pattern you are normally facing, but could you please explain how you expect the quarterly performance to develop in the coming month? Will this year be more back-end loaded with the strongest
Mm.
earnings in Q4, or do you already anticipate improvements in Q2 and Q3?
So the year should be a normal year, meaning Q1 being the lowest, followed by Q2, Q3, which are better than Q1, but still after Q2 and Q3, if you don't know the normal seasonality, one would think, how are they supposed to reach that kind of guidance? Yeah, and then again, an extremely strong fourth quarter. That will be the same case this year, and no change compared to the usual pattern seasonality of the business.
Thank you. You've mentioned the business in the or the safety division already, and also the defense improving. Can you give an update on this business performance, especially regarding the demand from the defense and the protection industries? A question is also you have mentioned in the presentation that their volumes will grow threefold, if I remember
Mhm.
correctly. Do you also talk about volumes?
And no, usually we do not. And having basically also putting out this target is just due to the fact that we believe that the defense business was not in the focus of our investors so far. since it was only of a minor magnitude, and it is, but if we reach these growth targets, it's actually just moving in there with some of the other big businesses, and that's why it's an important part of also the equity story. And we thought it's important that investors know about that. That's why we disclose these internal growth targets that we have. So besides, that's the first part of your question was on how this business is developing, and no update to what I already said, that our funnel supports this expectation. Even if everybody is talking about the new Geschwindigkeit, so an improved speed of doing business in that area. And yes, we do also see that, but still, that doesn't make it a fast moving business. We have very interesting businesses in the funnel, and peu à peu, this will translate then into net sales. Some of that already in this year, but more coming up in the next years.
Perfect. With a look on the time, it's 10 o'clock, so we are coming to an end, unfortunately. And I'd like to say thank you for the insightful questions, and a big thank you to you, Mr. Fischler, and all the participants. We appreciate your time and your interest in Drägerwerk. We are looking forward to seeing you at the next presentation, which will be now Evotech. And for this, you will find a link in the chat box, so you can easily jump into the next meeting.
Thank you, everybody. Goodbye.
Thanks a lot, and see you in the next presentation.